Hi, welcome to this video, which is on the 11th of June. It is Tuesday, and we're going to be looking at the British pound today. Now, we did look at the British pound at the weekend, and we said that turn in the British pound was imminent in our view, and the British pound has started to move higher. Now, in terms of in the video at the weekend, I said I was very interested in the GBP on the commodity currencies. I want to look at all three today: GBP AUD, GBP NZD, and GBP CAD. I'm going to be basically focusing on GBP CAD because what we've got in terms of the pair is the classic snapback trade. Now, what is a snapback trade? Well, it is a trade that basically will give you fantastic risk to reward. If you're wrong, you're not going to lose much. If you win, though, you are going to make a lot of money on the other side. The trade entry technique is very simple into this trade, and it really is a great one for detecting trend changes in advance. Now, what we are going to do is we are going to go and look at the charts, but please do keep in mind it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our daily technical and sentiment analysis of 14 Forex pairs, you can get live access to our member center on the link beneath this video. Right, charts now, and we're going to look at GBP CAD first. GBP CAD daily chart, and in terms of GBP, it's had a big fall. Now, I'm looking for most of that fall to be retraced, and you can see I've written it here. Trade entry, I'll give you that in a moment. To target, if reached, 5% with no leverage, and the risk is very low. You'll see that from the technicals in a moment. Now, in terms of 5%, there's just no leverage. If you've got, yes, 2 to 1, that's 10%. You don't need many trades like this to really boost the equity in your account. I really like this trade setup, and this, the reason I'm stressing this, a lot of traders talk in terms of pips. So they'll make 30 pips, 50, 100 or whatever. Don't think in terms of pips, because you want to be interested in the percentages. Pips vary between different currencies, obviously. Pips by themselves mean nothing. And if you aim for 30, 50, 100 pips, you're wasting your time, in my view, in the markets, because they're very noisy. There you get a lot of turbulence, just sort of action, which, is noise, basically. So you're going to have to use 100 pip stops normally, to stay outside the noise. So you can't aim for 100 pips, can you? You need a lot more. But always translate it to a percentage, okay? We always do that. We do talk about pips when we're doing our videos, but it's always related to percentages behind the chart. This is a big percentage with no leverage, and a little bit of leverage makes it a really nice return, of course, if it comes off. So why do I think the pound is going to have such a big rally? Well, she's had a big fall, okay? And why she had a big fall? You should look at that. Well, it's obviously with Brexit news. Market sells on a hard Brexit, i.e. no deal being done between the UK and Europe, because the UK is probably going to have a hardline Prime Minister. Well, we know that, don't we? It's known and discounted now. And I think in terms of this, you can watch my previous video at the weekend, but when you get this fall down here, traders are just believing hysterical stories in the media that just are not going to happen, like the Bank of England might cut rates, all this sort of stuff. They start to anticipate things with no substantiation in fact. And you very often get that in bearish or bullish extremes. So look at my previous video on a more in-depth view of the sentiment and fundamentals behind the chart. I'm just going to go through it briefly here. Now, we know that speculators' stops are now very close. Why? Because people who sold here have bought their stops down into this zone probably. The traders who sold here are probably mostly retail traders, just thinking the pound sell-off is going to go on more. Okay, so their stops are going to be very, very close. So any little bit of upside, the stops get hit. Traders who are short have to buy back their pounds, and it's a domino effect. You'll gravitate to the upside. It only needs a small trigger to hit stops, and sometimes you don't need a trigger at all in terms of news or anything like that. You'll very often see bearish extremes just suddenly peak, and then the price goes up, and the same with bullish extremes, prices go down. Now, when traders say to me, there's no reason to buy the pound. Can't see one reason whatsoever. Well, that's when you should go and buy it. Because take this quote, the worse the situation looks, the less it takes to turn it around. George Soros, he's very right. Yeah, when you've got too many speculators short, you've got high odds of a rebound, okay? Also, I've noted this, the CAD is the most overbought major currency of all. The GBP is the most oversold. That's in the last month. So the upside in this one should be really, really good. It's always good to have the other currency really overbought on the other side. Now, when you have big bearish or extremes peak or bullish extremes, you very often retrace the whole big move down or a really good percentage of it. Okay, so let's look at the technicals. Firstly, I'm going to draw a line there, and basically what you have is a double bottom. Okay, the double bottom is right on a round number, which is 168. Round numbers are very important in Forex trading. It's where institutions focus their order flow. And very often you'll find that there's a lot of buy or sell orders around a round number, or even right on the round number. And the ones on the round number are normally retail traders. We've always spoken quite strongly about when you're trading round numbers, make sure you have your stop well back, just because there's turbulence. Institutions will try and catch retail traders. So anyone who's sold through the round number here, the institutions might just push it through the number, get the orders, then she'll rebound back up. Okay, so the stop is going to be behind here, and I'm going to put it back well from this tail. Okay, so just in case there's one more prod to the downside, so I'm going to say 167.30, 70 pips back from the round number. Now I'm going to draw a trajectory there. The reason for that is you've got the tail, the body finishes above that body, that's the open is above the close, and now where we are now, we're above the previous open. Okay, so it's just kind of coming up now. Now, in terms of where would you enter it? To show you why have I picked that level? It's clear of that tail, obviously. That tail corresponds to another round number. So basically 169 is the level, and you want to get past the round number. So the battle of orders around the round number, which is inevitable, okay, is concluded. So come in at 169.30. That means basically you've got good odds of the price continuing higher. Once we get above here, the stops are going to get rolled. Now, where do I think we're going to go to? I do think we're going to retrace most of the decline. I'm just going for that round number there, up at 176. Now, of course, when you do trades like this, you know the sentiment behind the chart. You know you've got a bearish extreme. If you look at previous bearish extremes, like I say, when you get really hard sell-offs, they really rebound hard. Now, even if we don't get to this target, if we start punching through this level and you get a nice blue, I'm looking for it to really gravitate up. You can bring your stop up, okay? So you can protect yourself. Just go one round number back behind the one you're above. So if you're above 170, your stop would be 168.70, say. So give the stop a little bit of room, but I've got the feeling, the way this chart looks, seen it so many times over the years, you will get a big rebound. I'm not saying necessarily it'll get to my target, but I've got a feeling it could, and also if it doesn't, it is going to retrace a substantial amount of that decline. Okay, now if you look at the risk to reward of it on it, what is it? On entry, it's going to be around 5 to 1, isn't it? And of course, if you do get follow through to the upside, you can quickly lock in a smaller loss and then a profit, hopefully, obviously. But no, I really like the look of this trade. And the weekend, obviously, we did GBP AUD, and you can see what's happening in that pair now, because we're just going to go to the chart and take a look at it. All right, just going to use chart farm member center for GBP AUD. kind of a little bit of a different setup to GBP CAD. We had a little bit more confirmation. Yeah, 3 candles here finding support, a couple getting above, and then this one here poking up. Some poking up again, and yeah, level on the weekend video at 182.30. Just a little bit of profit this morning at 182.70, but it's looking very bullish to us. I'm looking for a big move up right to that candle high due to the fundamentals, then possibly under 194. And yeah, it's 3 p.m. now, so what are we doing in a GBP AUD since this morning? She's pressed up a little bit more. She's right on the round number. She can take out the round number, this 20-day moving average. That will then see a big move to the upside, in my view. So really, yeah, this one is again like I think about 5 or 6 to 1 in terms of risk to reward. So yeah, for us it looks really good. We are looking at another one as well, which is GBP NZD. Yeah, all the commodity currencies look weak against the pound, which I've discussed in previous videos. And actually this one doing really nicely this morning. She already got through 193. You can see our level of entry there, 192.10. This one again, a risk reward of around over 5 to 1. I don't know what it's doing right now, but I'm assuming it should be going up. Yeah, she's looking very perky. 193.51, so we're well clear now of the round number. So in terms of trading bullish or bearish extremes, okay, at the moment these are going okay. But yeah, if you get stopped out, it's just your risk to reward is so good. Yeah, if you've got a 5 to 1 risk to reward, you only got to make, what is it, 1 trade right to break even. And you should have a higher hit rate than that. Yeah, these sort of trade setups don't come around all the time, but if you look out for them, the real big sell-offs, the real bearish extremes or the opposite bullish extremes, you can make a lot of money, and you don't have to do anything complicated either. In terms of the breakouts that we're looking for, they're not even big levels necessarily. They're just confirmation breakouts through round numbers, and yeah, it's a great way to trade in my view. I hope you enjoyed the video and found it useful. We shall look at these pairs in future videos, no doubt. But that is the video for today. Thank you very much for watching me as per usual. Take care. Have a good day.